Good day, everybody. Welcome to our channel, Kareli Academy. This is where we are revising financial accounting N4 using the previous question papers. And today we will be using the question paper that was written on June 2023. Now, while you are looking for the question paper, please click the subscribe button and click the like button, so that you can at least be informed on when there is a new video that is being uploaded. Right, we said we are going to do June 2023. Yes, and then from June 2023 we are going to do question 5. Let us turn to question 5. All right, question 5 reads: as a junior bookkeeper, you are requested by your manager to draft the following. You must draft statement of cash flow for Malamaholo Traders as at 30 June 2021. You should draft a note for cash received from customers and also a note for cash paid to suppliers and employees. Now, for note for cash received from suppliers, as well as the note for cash paid to suppliers, on some question papers they use calculation. They would say calculation for cash received or calculation for cash paid to suppliers and employees. Do not be confused there. Now let us look at our question paper if we have all we need. 5.1, there it is. We have the statement of cash flow for the year ending 30 June. Then we also have 5.2 and 5.3 calculations. That is calculation or notes for cash received from customers, as well as calculation to cash paid to suppliers and employees. We have those two. Now, guys, when you do this section, the cash flow, the things that you need to have the current statement of profit or loss and comprehensive incomes. Let's check if we have it. There it is. We have an extract from the statement of profit and loss and other comprehensive incomes, and some of the information is also on the note. And then number 2, you need the statement of financial position. You need the one for the previous year and the one for the current year. Now, the one for the previous year, we are going to call it opening balances or balances at the beginning of the year. And then the one for the current year, we're going to call it the closing balances or balances at the end of the year. Meaning, for the current year would be your closing balances. For the previous year would be your opening balances. Are we together? Yes. Now we have the 3 things that we need. Where do we start? Now, I prefer to start with the notes or calculations, because now they are the ones that will inform the statement of cash flow. Starting first with 5.2, calculation of cash received from the customers. Now, from this note, we know that we need revenue. Now, on other question papers, they would call it sales, or they would call it turnover. So in this one, it's called revenue. We write revenue, and then how much is the revenue? Let's check. Go to your question paper. Where do we get the revenue? Revenue is found on the statement of profit or loss and other comprehensive incomes. Here it is, revenue. Right? How much is our revenue? It's 4,200,000. Okay, go to your answer sheet. I said it's 4,200,000. There we go. And then you know again that we need to have the trade receivables. Now this one, guys, for the assets, by assets I'm referring to trade receivables as well as the inventory. The opening balance we add, the closing balance we subtract. Meaning we must add trade receivables at the end of the year. No, at the beginning. I beg your pardon. At the beginning of the year. Now, remember, I said the beginning of the year would be the previous year. The balances of the previous year would be the beginning. Let us check. We have trade receivables. There they are. Now, at the beginning would be 227,500. At the end would be 200,000. Right? Let's go to our answer sheet. At the beginning of the year, we said it will be 227,500. And then at the end of the year, you subtract or less trade receivables at the end of the year. Now, because we less, it should be in brackets. That is 200,000. Do we see that? And then the total that we get, it will be called the cash inflow. The cash inflow for the year. How much will it be? You're going to say on your calculator 4,200,000 plus 227,500 minus 200,000. And the answer that you will get will be 4,227,500. Check. We said 4 million. We are short of 1 0 here. Here. There we go. Any question? Right now, there are some lecturers who are going to teach you that for trade receivables, you need to have an increase or a decrease in trade receivables. Now, guys, that is still correct. Now, where do we get this? We are going to compare the balance at the beginning of the year with the balance at the end of the year. If there was an increase, you will write increase on trade receivables. If there was a decrease, you will write decrease on trade receivables. Is that clear? and then that amount would come here. Meaning, for you to get full marks, you must indicate in bracket 227,500 minus 200,000. And the answer that you get will come this side. There's an increase. Remember, if you use increase or decrease, you don't write these two. We see that? Yes. So on this activity, let us use this method. Trade and other troubles we add, and then less the closing balance. Then we are done. We move to note number 2. Calculations to the cash paid. Now we still need revenue. We still need revenue. We said it's 2 million. It's 4,200,000. What else do we need? We must subtract let me say, we must subtract profit for the year, or we must subtract comprehensive income for the year. So on some question papers they use profit, on some question papers they use comprehensive income for the year. Now how much is that and where do we get that? Let us go to the question paper. Now for us to get the comprehensive income for the year, we must look at our statement of incomes, a statement of profit and loss. Now, if it's not there, you know that you will always get your profit under the statement of changes in owner's equity. And then you would take the one for the current year. You would take the one for the current year, meaning your closing balance. 383,500. Now, on our answer sheet, we will have that amount of 383,500, and it should be in bracket because we are subtracting. And then the answer that you are going to get there would be called the expenses. It would be the expenses for the year. Expenses for the year. Now, these expenses for the year, guys, should always be in bracket. They should always be in bracket, please, because we are going to subtract them. Now, how much is the difference? 4,200,000 minus 383,500 gives us 3,816,500. In bracket, 3,816,500. Do we see that? Then we must adjust for non-cash items. We must adjust for non-cash items. Now, what are the non-cash items? What are the non-cash items? By non-cash items, we refer to the interest received. Remember, you don't receive money for interest, but you know it's an income, so it's a non-cash item. Interest received. We also have interest paid. Can also have depreciation. Can also have profit or loss. Profit or loss on sale of asset. We'll write the correct one as we come to that. And then what else? Also the inventory. Now it's an asset. You write inventory. Remember, for assets we add the opening balances. So it's inventory at the beginning of the year, and we less inventory at the end of the year. Then we should also have the trade payables. Now, trade payables are liabilities. Now, liabilities, the opening or the amount at the beginning of the year we less trade payables at the end of the year, and then we add trade payables at the end of the year. Do we see that? Now, these are the amounts that we are going to need. Right? Now, what is interest received? Interest received can be interest on current account, can be interest on, say, any interest that you receive, interest on fixed deposit. Now, where do you get the interest? We should get the interest from, let's check the question paper. We should get the interest from the statement of profit and loss and other comprehensive incomes. Let's check. We don't have any other interest except fixed deposit. It's only fixed deposit that we received, but it's a question mark. It means we need to calculate. It's a question mark. That means we need to calculate. Now, where do we get interest on fixed deposit? Now, we must get that using the fixed deposit. Fixed deposit should be on other financial assets. That is note number 2. Now, for the current year, it's 25,000. Now, on your answer sheet, you will have that 25,000. We are calculating 25,000. Now, we must multiply it by what? Check again on your question paper. We must multiply it by 18%. We must multiply it by 18%, but it does not end there. Multiply it by 18%, and then you count the months. Now, from January 2021 until June, the 30th of June 2021, how many months do we have? Let's check. The end of the period is June 2021. So when I count, it's 6 months. It's 6 months. We said we use this 18%. We use this 18%. We want 18% of this 25,000. And then once we get it, we must check how many months have we had that investment. you calculate using this. It would be January, March, April, May, June, 6 months. Meaning we multiply by 18%. Let's go to the question, to the answer sheet. We agreed that we multiply this amount by 18%. It's 18 divided by 100. And then multiply by 6 divided by 12. How much will it be? Equals to 25,000 multiplied by 18 over 100 multiplied by 6 over 12. Now the amount we get will be 2,250. Now all the incomes should be in bracket. All the incomes should be in bracket. All the incomes should be in brackets. Now we also want interest paid. Now interest paid, we will get it as well from the statement of profit or loss. Now, given we have interest on overdraft as well as interest on mortgage bond, you can write them separately and call them interest on overdraft, below interest on mortgage bond, or you can add them under interest paid. Now it's 1.2 and 166,500. So I add them, 1.2 plus 166,500. We add 166,500 equals to 1.2 plus 166,500. It gives us 167,700. Now it's an expense, it remains positive. And then we go for depreciation. Now, depreciation and asset disposal, if you are familiar with the T accounts, please do use the T accounts. They are very easy if you use T accounts. Now, for depreciation, where do we get the depreciation? It also comes from the statement of profit and loss. Let's go again. We have it? No, we don't. Now, if we don't, we must use note number 1 to find depreciation. Now, how do we do that? Now, remember the depreciation is for the year, meaning the amount for accumulated depreciation for the last year minus the one for the current year will give us the depreciation for that year. Let me repeat. Accumulated depreciation until the end of 2020 minus the one that was accumulated until 2021 would give you the difference that is called the depreciation. Are we together? Meaning, to get that depreciation, let us start with depreciation for what? For vehicle. Now, the depreciation for the year vehicle. Let me do this and change the color so that we understand. Now vehicle, we take vehicle. Now on our question paper, we take 498,000 minus 366,000. 498 minus 366. 498,000 minus 366,000. How much does it give us? Use your calculator. Okay. 498,000 minus 366,000. It gives us 132,000. That is our first depreciation. 132,000 plus we want the one for equipment. We want the one for equipment. To the question paper, equipment would be 267,500 minus 172,500. 267,500 minus 172. 267,500 minus 172,500. In the answer sheet, there we have it, equipment. Now for equipment, I'll do it here. 267,500 minus 172,500. It gives us 95,000. We are still on depreciation. 95,000. And then back to the question paper. And then we learn again that a vehicle has been sold on the 30th of June. That vehicle was sold for 132,000. We are going to need this amount. This is the selling price. This is the selling price. We are going to need it. It was sold for 132,000. The cost price of that vehicle is 227,500, and the net carrying amount is 120,000. Now we need the depreciation for the year for only this vehicle that was sold. How do we do that? Remember, to get the depreciation, you take cost price minus accumulated depreciation. Now let us indicate it as sold vehicle. We take the cost price. How much is the cost price? The cost price is on the question paper 227,500 minus 120. 227,500 minus 120. 227,500 minus 120. How much is it gonna be? I'll do it here as well. Equals to 227,500 minus 120,000 gives us 107,500. 107,500. We are done. Now, once we have those three amounts, we must add them. 132,000 plus 75 plus 75,000 plus 107,000. They will give us 334,500. 334,500. Now, I showed you how do you get this amount. So don't be surprised. That's how you find them. And then we need to indicate whether we got a profit or a loss. How do we do that? To find that, remember the current value of your asset, the current value will be called the carrying value. Carrying value is cost price minus accumulated depreciation. Now, to get whether it's profit or loss, you get the carrying value and then you minus the selling price. Now, let us check question paper. We are on this vehicle that was sold. Carrying value is 120,000 and it was sold for 132,000. Right? 120 minus 132. 120 minus 132. 120,000 minus 132,000. How much is it? It's equals to 120,000 minus 132,000. The answer that we get is 12,000. Now, how do we know if it's a profit or if it's a loss? Now, if we sold it for more than the carrying value, it means we made a profit. If we sold for more than the carrying value, we made a profit. But if we sold for less than the carrying value, we made a loss. And in this case, we sold for 132,000, meaning that is a profit. Now we'll call it the profit on sale of, what did we sell? We sold a vehicle. Profit on sale of vehicle. Now, profit is an income, therefore it should be in brackets. You see that? Now, I believe you do understand. Okay, now we go to inventory. We want inventory at the beginning and inventory at the end. Inventory, we will find it under the statement of financial possession. Here is our inventory. Here is our inventory. At the beginning is 181,000. At the end is 244. 181, 244. It's 181 and 244. Therefore, on our answer sheet, we will have 181,000 for opening balance then minus 244 for closing balance. It should be in bracket. You must always remember that. And then trade payables. Where do we get trade payables? Trade payables is also found on the trade payables is also found here on the statement of financial possession. It's a liability. Let's check under the liabilities. Here is our trade and other payables. Trade and other payables. Now, at the beginning of the year, it's 112. At the end, it's 140. On our answer sheet, at the beginning, we minus 112,000, and then we add 140,000 at the end of the financial possession. And then we must start calculating from the expenses for the year. Now on your calculator, you press minus 3,816,500 minus 2,250 plus 167,500 plus 334,500 minus 12,000 plus 181,000 minus 244,000 minus 112,000 plus 140,000, and it should give you 3,363,550. That is in brackets. That is in brackets. Now, students, you have your calculation for cash receipts from clients. That is 4,227,500, and you also have your calculation or note for cash paid to suppliers and employees. Here they are. Now, as they are, you take them to the statement of cash flow. Now we are starting with the statement of cash flow. Now, the first amount under the statement of cash flow, we will have under cash flow from operating activities, we will have cash received from customers and cash paid to suppliers and employees. This is note number 1. This is note number 2. Where do you take them? Take them from the notes. Now, cash received from clients, here it is from the notes. And then cash paid also from the notes, cash paid to suppliers, here it is. Now you have your two amounts, and then when you add them, they will be called cash generated from operations. Cash generated from operations. Now, on some question papers, they don't want you to do these two notes. Instead, they will want you to do only this note. There. Right? And then you'll say 4,227,500 minus 3,363,500, and it will give you 863,950. Then you will also need the interest expenses. You also need interest received. You will also need drawings. Now, interest expenses, we have it already as interest paid. There it is. Interest expenses, we have calculated it already. That is interest paid. And then interest received, it's also calculated. There it is, 2,250. But now the difference is now in the statement of cash flow, the expenses should be in brackets, meaning you should have this in brackets, and you should have this out of brackets. We see that it's vice versa. On the notes, incomes are in brackets, but in the statement of cash flow, the expenses are the ones that are in brackets. Even the drawings should be in bracket. Where do we take the drawings? Drawings will always be under the statement of changes in equity. Now you take the drawings for the current year, the closing balance of drawings, which is 150,000. That is drawings. You take it to your statement of cash flow, 150,000. Let's go to our answer sheet. And on our answer sheet, let us have our drawings as 150,000. We see that. And then once we have done that, we need to calculate this amount right here. That is cash flow from operating activities. So you will take cash generated from operations minus interest received, interest paid, plus interest received minus drawings, and they should give you 548,500. Now we are done. We go to the second part, that is cash flow from investing activities. Now the cash flow from investing activities, what are they? We need additional assets, meaning that is additional land and building. We need additional equipment. We need additional vehicle. Now, where do we get them? We go to our notes, question paper. On the question paper, we must go to note number 1, the property, plant and equipment. Now we want the cost price, so we will check, meaning we want to check whether from 2020 to 2021 did we buy more equipment. Now guys, remember I said to you, if you are good with the T accounts, you can use the T accounts to determine this. Yeah. Right? Therefore, we are going to say 1,600 minus 1,600,000 minus 1 million on the answer sheet. Let me have the calculations like this. Right? And then the answer would be 600,000. Now, guys, please, the additional assets, always they should be in bracket. I think the difference is, the difference is 600,000. Do it on your calculator. And then equipment, we do the same thing for equipment. On the question paper, let us check the equipment. Equipment, we take 410,000 minus 325,000. 410,000 minus 325,000. Let's have it. 410,000 minus 325,000. Where is it? And how much will it be? Hopefully still usable. And remember, it should always be in brackets as well. Yeah. Right. But the difference will be 80,000, meaning there's an additional equipment of 85,000. And even for vehicle, we are looking for additional vehicles. Now, additional vehicles, we are going to say let us check from the question paper. We have 1,052,000, and we also have an additional one given here of 227, meaning this is the one that was sold. We must include that cost price, and then from that we must subtract the opening balance, this one of 731,100, meaning the same thing that we were doing. I think it would be easier if I do like what we've been doing. We have been saying that closing balance 1,052,000 minus 731,000 and on the answer we get, we must add the sold vehicle. Now when you do that calculation, let us check. Equals to 1,052,123 minus 731,000 plus 227,500,000, and it gives us 488, again 548,500. Remember, always in brackets. So meaning the asset that was sold, should be added. The asset that was sold should be added. Meaning, always you take the closing balance or the amount at the end of the year minus the opening balance. Then the sold one should be added. Then it will give us this amount. I hope you are following me. And then we are done with additional assets. Now we go to the proceeds. We go to proceeds from the sale of asset. What did we sell? We sold the vehicle. Now that vehicle, we sold it for how much? Let us check on the question paper. We sold that vehicle for 132,000. I had highlighted it. Do you see that? We sold that vehicle for 132,000. Therefore, we should have that 132,000 as it is, 132,000. And now the proceeds should not be in brackets. Proceeds should not be in brackets. And then investment. Now we have an increase or a decrease in investment. Meaning we compare the opening balance with the closing balance to determine whether it has an increase or a decrease. We go to other financial assets. Now from 0 to 25,000, it was an increase. From 0 to 25,000, it was an increase. Therefore, let me omit decrease because it was an increase in investment, meaning from 0 to 125, from 0 to 25,000, it was increased by 25,000. And remember, we said additional assets, they are in bracket, meaning if it was a decrease, it was not going to be in brackets. Do we see that? Right? And then when we are done with that, we must calculate, we must add this. We must add this. On your calculator, you start with minus 600, minus 85,000, minus 548,500, plus 102,000, minus 25,000. Then they will give you minus 1,126,500. Do we have it like that? Yes. Now we are done with cash flow from investing activities. Now we move to cash flow from financing activities. Now students, please remember click the subscribe button for you to be notified when there is an additional video or additional work that we are doing. And please also like this video. Also like this video. Now, cash from financing activities. Now, how do we finance? How do we finance our business? We finance it through capital contribution. Again, we finance it also through loans. So we must check whether it's an increase or a decrease. Very important. A loan can increase, a loan can decrease. If we take additional loan, it increases. And if we repay the loan, it decreases. Now, how do we get the capital contribution? Now, this one is a bit tricky. Capital, we go to statement of changes in equity. Now, logic tells me that the amount that was the closing balance in 2020 is supposed to be the opening balance in 2021. Now have a look at it. Let's pause for a second. The closing balance in 2020 is supposed to be the opening balance in 2021. But in this case, when you check, they are different. Why? The reason why they are different is because there was an additional amount between this closing balance and this opening balance. That is your additional capital. Therefore, you will take the closing balance for 2020, the closing balance for the previous year. Closing balance for the previous year, how much was it? It was 1,029,000. 1,029,000, and you subtract the opening balance for the current year, 1,087,000. 1,087,000. Let me check if I got them right. 1,029,000 or 1,087,000. Yes, meaning the difference between the closing balance of the previous year and the opening balance of the current year is your additional capital. Let's see how much is it. 1,029,000 minus 1,087,000. It gives us 58,000. Now that is the difference. Now, because it's an additional amount, it should not be in brackets. It should not be in brackets. It should not be in brackets. Let's recap. You say this amount has increased to this amount. I'm saying this now. We say the closing balance 2020 has increased to the opening balance 2021. The difference between the two would be your additional capital. Now, additional capital, like I alluded, you don't put it inside brackets. And then we check our loan, whether our loan was an increase or a decrease. Now, where do we get the loan? We get the loan from the statement of financial possession. There it is, mortgage bonds. Now, from 2020-2021, it was an increase from 800 to 1.3 million. It was an increase. Therefore, we will say an increase and an increase on mortgage bonds. And if they wrote loan, please use loan. 800,000 and 1.3. Now, how much is it? Now, the difference is 500,000. Now, if it's an increase, you don't put it in bracket, but if it is decrease, you put it in brackets. There. And then you add the two, and they give us 558,000. Now we are done with cash flow from finance activities. Now we move to the next part. The next part, that is net increase or decrease in cash. Now we want net increase or decrease in cash. Now, how do we get that? To get that, we are going to add these three amounts. Equals to cash from operating expenses minus cash from investing activities plus cash from investing activities. They give us minus 20,000. Now, if it gives you a negative answer, that means now it is a decrease. That is cash decrease. That is cash or net decrease in cash. Do we see that? And then we now have cash and cash equivalent at the beginning of the year. also have cash and cash equivalent at the end of the year. Now we go back to the question paper to check our cash and cash equivalents. Now always bear in mind that we might have the bank overdraft. So you should always have that in mind. For a bank overdraft subtracts the bank. Ne? Right? Therefore, here is our cash and cash equivalent. We start first with 2020, that is at the beginning of the year. Here it is. It's 15,000. Do we have bank overdraft? We don't. Therefore, on our answer sheet, you will have your cash and cash equivalent as 15,000. And then for cash and cash equivalents at the end of the year, we check again on the question paper. We check again on the question paper and we find that we have 1,000 as cash and cash equivalents. And we also have 6,000 as our bank on overdraft. Remember, I said bank overdraft affects our cash and cash equivalents. Therefore, what do we do? Go to your answer sheet, and then on your answer sheet, you now say 1,000, which is your cash and cash equivalent, minus 6,000, which is your bank overdraft. And how much does it give you? It's supposed to give you minus 5,000. We don't need a calculator for that. And guys, if you have this amount, that means we are at the end of our module, and I'm expecting questions from you. Now, how do I get the questions? You write them on the comments, or you send me an email so that we can be able to attend them. And guys, with that being said, this is the end of our question paper. We are done. We just want to view all the amounts so that we can check. I hope they will be visible enough. They are, I think they are visible enough. Here is your cash flow statement from the beginning. There is your cash flow statement from the beginning. You can pause and check. And then here is also the notes or calculations from the beginning. You can pause and check. And that is the end of question 5. Now, students, you have been a wonderful audience, and I want to say thank you very much. And I hope you're going to pass your exams. One thing that I have to say is lots and lots of luck for your coming exam. For me to you, I'm going to say peace. Remember, subscribe to this channel so that you can be able to see more videos that will be uploaded. We are going to do more revisions. So Good luck, guys. Practice, 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 and you get your pass. Have a wonderful day. Goodbye.